Good morning, guys. Got Elizabeth and Jay joining us. Starting out 2026, you guys are clearly the only two partners we have that want to make any money this year.
Good morning.
How are you doing,
Good morning.
Elizabeth?
I'm all right for, I don't even know what day it is. Wednesday?
Wednesday.
Yeah.
You sure?
It doesn't feel like a Wednesday.
It feels like the third Monday of the week for me.
Right.
So,
Yeah.
Exactly.
Last week was all Mondays, and I think we're still on Monday.
yeah, it does feel that way. But you know what's interesting? And we've been talking about this. It's busier this year. Normally, like we've seen this trend, this last, really ever since like 2007, 2008, when the market shifted and was shaken up, where historically December's been my busiest year of the month. The year it slows down in January, but what we've seen lately is, I mean, people check out mid-December and they do not come back until mid to the latter part of January. And then they realize they have no money and they got to get their pipeline up. And we really don't see a lot of strong activity until late February, March. And we've seen a pretty consistent lift so far already, which is encouraging and exciting.
A little bit. I've
Um,
noticed it more in Texas than California.
well, and you're in kind of a cool place of doing loans in both states. So it allows you, we lend nationwide. So when we do see like California, for example, there have been periods of time where like inventory levels were just in like non-existent. We could not get offers accepted, but there were much more stable markets in other parts of the country. So that was nice. But let's get started. We had no idea what kind of a turnout we would get. This is a test of the meet and greet. Normally, when we do a training, it's a very structured training with a dedicated product line that we're going to be focusing on. And this is more an opportunity to just jump on and say, here's the team. What questions do you have? How can we help you? So, Elizabeth, we've worked together. Jay, newer name. I'm Jason Twiford, your account executive. On the call with me, I've got Todd Pierce and Dylan Johnson. Both work on my team. They are exceptional, absolute rock stars at what they do. Each one with a kind of, it's like the movie Taken. Each one has a very unique skill set, and they're deadly. But that being said, we'll give each one of the guys a minute to say hello. But this is an open forum to come in with any questions you may have, any scenarios, pricing, anything you guys want to talk about. So, and really, we kind of follow the lead of what's on your mind instead of us vomiting all kinds of information on you that we want you to walk away with. So, Todd, Dylan, say hello.
Well, hello everyone. I'm Dylan. I'm the younger guy. Todd looked like he was deep in some work real quick, so I was going to jump in first. But I'm newer to Jason's team. I've been working with him for I think about 6 months now. But it's been an awesome opportunity. I love getting to meet some of y'all and working with you.
Thanks, Dylan. My name's Todd. This is actually my 29th year in the mortgage industry, and I've gotten to that point where I fully understand that my role here is to make everybody else an expert in industry. So we're excited to help you do that. Please know that access here is unfettered. You're welcome to call myself here at the Team Twiford access line at any time or use the email. Bring your questions, bring your loans, and let us help.
So that being said, what questions do you guys have? What can we help you with? We can do all the talking. There's no shortage of information we can hit you with. But before we do that, Elizabeth, Jay, Alray, anything you guys have, any files, any scenarios you're having a challenge with, anything you want to go over?
No, I'm pretty much brand new, just came to listen and learn.
Okay, well, great. Jay, what company are you with?
Florida Homes.
Okay, excellent. Great market. Elizabeth, anything on your pipeline that you need any help with?
No, I'm thinking of like more ways to get more of those. Sorry, my dog's in my lap. get more first-time home buyers, the get them to just want to come out is what I'm trying to focus on more this year.
We've got some exceptional strategies that we can help you with, and we'll dive into that a little bit momentarily.
Okay.
We got Andrew that just joined the call. Andrew, good to see you. Sorry that you're not up in Washington at Eagle Lodge right now, having a lot more fun than we do in the business. But to catch you guys up, we kind of touched on this. Very open forum, not a structured training like we normally do. It's more meet and greet. Todd and Dylan are the guys on my team. Ask questions, go through scenarios, really just open it up to anything that you may want to touch on.
Yeah, good morning.
Good morning.
Yep. So I have a client in Texas. They're looking for a new construction loan. Do we have that?
So construction loan, no. We don't do any construction financing. We don't have any rehab financing. If you've got somebody, once that property is finalized, then we can absolutely do the takeout. We could do the permanent loan for you. But as far as any construction financing, no, we don't have anything.
How about in California for a just the land?
Land loan? Okay, you're
Yeah.
hitting us with some pretty challenging situations that we actually do not offer. We don't do any land loans either.
No. Oh no.
No, but okay, here's where you are going to come into play on this.
Okay.
Your last name is Doctor, is that correct?
That's right.
Okay, well, we're going to give you a little bit of insight into a new program that we've got, and it is rolling out. We've got just a glimpse of information on it. I've seen a draft of the guidelines. We don't have final guidelines. We don't have pricing. So I can't give you real specific information, but I'll give you an overview. We're rolling out a physician loan, and we are very excited about this. I'll give you some bullet points on it. We get asked about physician loans multiple times a week, every week. And there really has not been a viable physician loan in the marketplace in quite some time. So what this physician loan is going to look like, 100% financing with no mortgage insurance.
Oh.
Loan amounts up to $2 million with a credit score of 680 or higher. Student loan payments are excluded. So when you see some of those doctors that come in that have $300,000 and $400,000 in student loan payments, even if we hit them for just a 0.5%, that could be thousands of dollars that are impacting their DTI. We exclude student loan payments for doctors coming out of their residency that have signed contracts with new hospitals. We'll use projected income. So we're very excited. We should have this rolled out hopefully by the end of the month. But this is going to be something that will certainly open up opportunity for you guys to be able to discuss with realtor partners, to be able to promote on your social media. We're going to blast it all over the place. So stay close to us. We will have additional information on this in the next couple of weeks.
Is that only for primary home or?
I believe so.
Yeah.
Owner occupied. I believe it is going to be for purchase and rate and term. But again, we've seen a draft of the guides. We don't have any really tangible information to be able to dive into and access. But it should be exciting.
Yeah.
And for lack of any, we talk to people all the time, and it's like, hey, what's new? What do you have new? I mean, sometimes it's like, man, I got a new pair of shoes, right? There's really nothing new coming out. And this is going to give us an opportunity to say we have a brand new program that does not exist in the marketplace that we can leverage to be able to grow your business. So that aspect is very exciting.
So, Jason, the doctor's loan, would that include nurses as well, or just the doctors?
So it is going to include several layers of medical professionals. Will nurses qualify or not? To be honest, I'm not certain. But I do know that it was MDs, physician's assistants. There were several categories of medical professional that did qualify for this.
Okay.
I believe
But
I
again,
saw
I'm
in
like
the
dangling
guides.
I'm dangling that carrot out here that we have a program coming. We have some very basic information, but we don't have everything specific yet for you.
I like
and if
it.
I
I
could jump
may
in
come
real
back for
quick.
that.
Yes, Dylan, you
I
had
was going to
something
say,
to
I
add.
was looking at some of those early drafts. CRNAs are potentially going to be one of the people that we reach out, that we're going to be financing for. So we might have a little bit of room outside of just doctors.
Awesome.
Yes, we got Raj Patel. Got Raj. Thanks for jumping on the call, buddy. I've known this guy for shit a long time. We've been doing business together for a heck of a long time. So thanks for jumping on. Any questions, sir? You're muted. Clearly, technology is not his strength. He's still muted. That's okay.
The sign here has an advantage.
And Andy jumped on. How are you doing, Andy? Any questions we can answer for you?
I'm gonna have to read the instructions to this.
Hey, Raj, you're unmuted. Welcome to the call. You're unmuted, but we still can't hear you.
Yeah.
We cannot hear you, Raj.
All right, Raj, you figured that out. We're going to come back to you. We're not going anywhere. So, Elizabeth, you asked a question about how do we attract first-time home buyers? And are you're in two markets. You do some business in Texas, you do some business in California. We are really expanding business, partnering with loan officers that want to leverage our DPA product. And I will tell you, our DPA programs are incredibly powerful, regardless of where you're at geographically. Our DPA products are nationwide, available for you in Texas and California with no restrictions. And our DPA programs, I'll give you a couple of examples of what we've closed in the last 30 days. And I would then really encourage you to leverage this product, to go market it, to go put it on your social media, to have these conversations with your realtor partners. And if you want to put together trainings for your realtors, or you want to do, I've got a client that's doing a first-time home buyer seminar at a school district where I'm going to go help them present on a Saturday in March. We've closed transactions where when you structure this the correct way, we've got DPA that can cover down payment. We've got DPA that could cover down payment and closing costs. And our DPA goes down to a 600 credit score. Your client doesn't need to be a first-time home buyer. Most of our DPA products don't have income limitations. We follow AUS, so your borrower actually qualifies for the home that they want, not this restricted DTI where, I've got competition that's going to limit DTI on a down payment assistance program to 45 or 50%, where I'll go 50 to 57% and really give them the home they want. But what we've closed in the last 30 days, we've closed a transaction where we refunded the buyer's EMD to them at the close of escrow. And we prepaid 90 days of HOA dues, and we refunded the appraisal. That was one transaction. It was structured the right way, but literally that borrower closed escrow with at the end of the day, they had no money out of pocket. We had a buyer that came in on our grant program, and literally they were given a 60-day notice by their landlord. They were not planning on buying a home. They reached out to several realtors and loan officers, and when they explained their situation, they had $3,000 in the bank, right? They had decent credit, good jobs, right? They checked a lot of the boxes, but they had no money. And what we saw was that these realtors and loan officers told them, I can't help you. You have $3,000 in the bank and you want to buy a $500,000 house. This was a California transaction. I literally can't help you. We had a client that advertised on social media our down payment assistance program. And what they advertised was that they could help a home buyer buy a house with no money down. Very simple social media. They connected on social media, and the buyer ended up reaching out to my client. Client hooked him up with a realtor that would help him. The buyer had to borrow $2,000 from a family member to have a $5,000 EMD because they only had $3,000. So we were given the challenge of needing to be able to close escrow and get a $2,000 refund at the close, leveraging seller credit, to be able to close escrow and have our borrower pay his family member back the $2,000 they had to buy. And no kidding, loan officer was awesome. We structured the deal. It closed in 13 days from start to finish. It was his first loan working with us and my team, and they were ecstatic. We literally brought them in, put them on a grant. That grant program was money forgiven at the close, and we closed escrow, refunding EMD back to the buyer. He paid his family member back. I mean, they put a family member in a home. So if you want to pull people out of the woodwork, advertise the product that's available where you're able to close escrow for customers with little to no money out of pocket. And we really do make those transactions happen week in and week out. My team and I, we closed 25 to 35 DPA transactions a month. We funded 3 DPAs yesterday. So when we say that we do it and we're experts at it, we absolutely are. We will partner with you and walk you step by step through the process and help you get there. So that being said, how can we help you go promote this program and pull some of these first-time buyers out of the woodwork?
Jason, I got the Star Marketing Studio up and running with DPA FHA social medias. Did we want to share that real quick?
Absolutely. Can you share, Todd?
Yeah.
Okay, and to the extent of wanting to partner with you and help you, we have got a marketing studio that you all have unlimited access to. You can log in, you can literally input your information, save your headshot, save your company logo. It will do social media marketing. It will do print marketing if you want to drop information off at a realtor office. It is an exceptional tool available to you at no cost to be able to present this information.
Yeah, so confirm, Dylan, you guys got eyes on that? Perfect.
Yep, we got it. It's all up.
You kind of have to look the other way just to let you know. So yeah, I mean, everybody who has a Star login this is the Star Marketing Studio. You get there by clicking on the link here, Star Marketing Studio, in your Star portal. And once you're in here, you want to get in here and complete all your account information. There's all kinds of stuff available here, including, which is really important, the idea that you can co-brand with partners. So you can get identities in here for real estate partners, other financial partners. And then coming back here to the designs, to the dashboard, we've got all kinds of different ways to search. Right now, we're talking about what we can do with DPAs. So any of these, when you bring these in and create the design, it'll pull in the basic information out of your account profile and give you ready-made, quick and dirty advertisements. Just these social media things are optimized for LinkedIn and Facebook as constructed. So they are the quick and dirty. And for me, that's just what the deal is making the phone ring. So once you get through this, you can download these, you can use them. There are some expanded opportunities in the Star Marketing Studio to enable auto posts and things like that. So there's a lot of tools here to be able to use. I would encourage everybody to get in and see what you can do.
Excellent. Thank you very much, Todd. And we're here to help you with that. We're here to partner with you. Elizabeth, something else that you could do, and it's leveraging this collateral. Do you have any realtor partners that you've been trying to tap into that, aren't showing you a whole lot of love? And if so, I would approach one of them and say, hey, I see that you've got a listing. It's a listing that is a good candidate for an FHA loan. And just ask them, hey, Dylan, I see you got a listing at 123 Main Street. Would you like to host an open house there together? And they may say yes, they may say no. And if they say yes, great. I'll put some collateral together. You can pull up the down payment assistance flyers. You can co-brand that with your realtor partner. You want to build a relationship. You offer to go do an open house with them. You show up with all the collateral. You help them put their signs out. I mean, it's going to take a little bit of a commitment, but if you're willing to do that, you're going to see the results. I mean, I've got clients that have picked business up in this exact strategy, this exact format. If they say, no, you know what, I'm going to my kid's soccer game on Saturday, say, hey, would you mind if I go do an open house at your property? And I will take co-branded marketing material and promote you while I'm there at your listing. And it is a rare situation that a realtor says no when you're willing to go sit at an open house and promote that and do the work for them. So I think there's a tremendous opportunity. And I think the way to really tap into that first-time buyer and that population of buyers is to leverage the down payment assistance. I mean, I will tell you, if you summarized in one word what the consumer's perception of down payment assistance is, it's free. It's that they're going to get free money. They're going to get something for free. And if the consumer thinks they're getting something for free, they're going to call.
Yeah, my agents, whenever I meet a new one, I always send them the DPA flyer and I co-brand it to them, and they take to that like crazy. Oh, thanks so much for doing this, blah, blah, blah. I was like,
Nice.
oh, no problem. Ah.
But I think there's a tremendous opportunity for you to take that one step further. And I think that's exceptional. And that's exceptional for everybody else. Part of why we wanted to do this meet and greet, you know, post-COVID, I go into offices, I'm old school, I still go in the field. And the number of people that are working in an office has shrunk to almost nothing. And you lose a lot of the collaboration. And here's an opportunity for LOs from all over the country, from all different companies, to be on one call and share some cool stuff. I think to take that one step further is, here's the flyer, but let's go do the open house. Let me go promote your property. Let's get together and actually do this. And I think that's where you're going to take the value add of putting the flyer together and take that one step further. And then we've got open house flyers. I've got our marketing studio, what Todd has pulled up, because our marketing studio interfaces with your local MLS. So if you said, you know, hey, Dylan, you got a listing at 123 Main Street, I'm going to create an open house flyer. We're going to go do it this weekend. I'm also going to do some down payment assistance flyers. When I type in the address on that open house flyer, it will pull the data from MLS. It will pull the photos from MLS. You can then condense the photos and select the ones you want. You can use AI to rewrite the narrative that was probably already written with AI and condense it onto what will fit on the flyer. And literally, in a matter of a minute or two, create completely professional co-branded marketing collateral to be able to take to that realtor. The fact that this is, you know, and if you work for a bigger company, some of our partners are bigger, they have their own marketing departments. Most of them are not. This is available to you at no cost. Please take full advantage of this. And if you're not familiar with how to use it, get in touch with us. We can assist you with it. It's in our wheelhouse. It's our area of expertise, and we're happy to do it and help you really promote that business. So any other questions, any scenarios, any product information that we can help you with? All right, we're here, guys. Somebody, I mean, we can, like I said, we can keep chatting. Anybody, you guys want to see how quick and easy our pricing engine is? You guys want to take a look at our down payment assistance pricing? We're here for you. You guys jumped on. Please, somebody tell us what we can help you with.
Yeah, can you elaborate a little bit on DPA program that you offer, please?
Absolutely.
Is it forgivable or not forgivable?
We have everything. So to give you a quick overview on the DPA, that is more than anything else, the product that people are interested in, and it gets attention. And if you were going to promote one product to your realtor partners, this would be the one. From the perspective, I mean, if you tell them, hey, I've got great conventional pricing, nobody cares, right? We have excellent service. We underwrite quick. Nobody cares. You go offer something unique, people are going to stop and listen. So to give you a quick rundown and an overview on our DPA, we have several options. Our DPA is available FHA, USDA, and conventional. We have the only nationwide conventional DPA product that exists in the marketplace. There may be some state, local, city, county type of conventional DPA options, but nothing on a national scale and nothing as powerful as what we offer. So FHA, USDA, and conventional credit scores down to a 600. Your client does not need to be a first-time home buyer. We have virtually no income limits on our DPA programs. We follow AUS on our DPA, which means from a documentation standpoint, you don't need to have 2 or 3 years tax returns like a CalHFA program to verify you're a first-time home buyer. If your client's a W-2 wage earner, we need a W-2 and a pay stub, 30 days worth of pay stubs. We'll jump into the pricing momentarily here. But by following AUS, we go to a 47 front end, 57 back end. We allow non-occupant co-signers on our DPA. I've got grant programs available. I've got repayable product. I've got forgivable product. We take SFR, PUD, condo, 2 to 4 units. We do manufactured homes on our DPA. We will also do manual underwrites. We will do FHA spot approvals. I've got conforming and high balance options on the DPA. We still take permanent, non-permanent resident aliens on DPA because I've got a conventional program. I've got, like I said, I've got the only conventional program. You can go advertise non-permanent resident DPA products. Nobody else has that. Like if you're in California, for example, like CalHFA won't take DACA borrowers. I can do DACA DPA all day long. And these are our programs. We are fully delegated on this. My turn times are the same as they are a normal FHA or conventional purchase, which is 24 hours. When I gave you an example of closing a DPA in 13 days, that was just a normal turn time and a loan officer's first transaction with us. And we closed it in 13 days, upload to fund on a DPA. So turn times are exceptional. We follow standard agency guides to a T. So when you're looking at conventional, you can get up to a 3% seller credit. FHA, you can get up to a 6% seller credit. That's how we're able to close these transactions with literally no money from the borrower, refunding the EMD, refunding appraisal, prepaying HOA dues. We have lender paid options available on our DPA. And we'll put the cherry on top. You can literally use 2-1 or 1-0 buy downs in conjunction with our down payment assistance programs. So literally, when we say we are the DPA experts, we back it up, number one, with the fact that I close 25 to 35 DPA loans every month. We do it consistently. And we bring in an area and a level of expertise that you're not going to find anywhere else. If you're familiar with the Scotsman's Guide, I am the #1 FHA producer in the country on FHA business. So, and a lot of our DPA is FHA. So you can leverage that area of expertise. You had a question, sir.
Yes, where do I get the guidelines for this DPA forgivable?
You can literally jump into our website at orionlending.com. We have a tab that says product matrices. You can go in, or if you just shoot us an email, we will reply back. Number one, make sure you have login credentials. And number two, we will send you the guidelines on our 3 distinctly different down payment assistance programs. But when you log in, you'll see that we have all of the DPA guidelines in one concise place.
Okay, I'm sorry, Jason, you are Orion, right? Or what company?
Yes, sir. Yep. Orion Lending, J Twiford at Orion Lending, or you could go to Team Twiford at orionlending.com.
Thank you.
You're welcome. All right, and let's take a look at what this pricing is. I mean, when I tell you we find ways to make this DPA work, Todd, would you pull that pricing back up? We've got 3 different options, really. We've got a repayable product, we've got a forgivable product, and we've got a grant program. I will tell you, hands down, the grant is the most exceptional product we have. It's available conventional and FHA. The money is forgiven at the close of escrow, right? So let's just take, we've got a $450,000 transaction here. Whatever that down payment turns out to be is free money given to the borrower at the close. You may ask, why would I ever take a program other than the grant? Well, we're going to show you why. And sir, you don't even need to raise your hand. You could literally just start talking and interrupt me, and I'm happy to answer your
Oh,
questions.
sorry, I didn't want to interrupt that.
No. We are inviting you to interrupt.
I forgot the question. It has to be with what you were talking, but I completely forgot. If I
That's okay.
remember,
Well,
I'll bring it
hey,
back.
we'll jog your memory when it comes back to you. Just jump in.
I got it.
So,
The percentage for the down payment assistance, how much is it? 5% like Hero, or is it less than that? 3%? What is it that you
so
help with?
if we're going FHA, we have two options. You can do 3.5 or 5%. So we will cover either the down payment or down payment plus some closing costs. I've got a grant program that's at FHA 96.5% first, and you can either do a 2% grant or a 3.5% grant. You select it. So it just depends on what your client's need is. Maybe they only need 2%. Maybe it's a situation where they fell in love with the home, where now all of a sudden they're going to have to pay their realtor commission and they don't have the money. So it gives them an opportunity to pull an additional 2%. Pricing's better on a 2% versus the 3.5. But on the conventional, if your client's first-time home buyer, they can go 97% LTV. 97%, you can select a 1, 2, or 3% grant. So in most cases, we give you the option to have 100% CLTV and get some money for closing costs. So Todd, if you would, let me start at the top. Show the repayable second. You may ask, why would I ever take a repayable second when there's a grant program available? And the answer is very simple: lender credit. Look at the pricing on this scenario. I mean, this is a borrower paid transaction where at 7.25 on a lender paid, or I'm sorry, 7.25 on a repayable second, we're paying 3.7% in lender credit. Okay, what that means is we're giving your client the entire down payment, 3.5% for the down payment. And then in addition to that, at a rate at 7.25, we're going to give them an additional 3.7% to help with closing costs. So that is how we're able to structure some of these transactions where we refund the EMD, we're paying for appraisals, we're basically closing escrow with zero money out of pocket for the customer. This would allow you to go lender paid. Even if you're at a 2.75% comp plan with us, we would cover your entire compensation plus 1% toward title, escrow, and prepaids. You bring in a nominal 1 or 2% seller credit, you're literally closing escrow with no money. You're giving the buyer all of their money back. Now, in some cases, your client may not need that much money. We could look at more of a repayable, or I'm sorry, a forgivable second. So if we scroll down to the 3.5% forgivable second, that provides the entire down payment. It is a silent second, but there is a recorded lien. That lien is not forgiven until the borrower makes 5 years of payments on the first. Okay, that's why I don't really love the program, because they're handcuffed to this first mortgage at a higher interest rate for a very long period of time. So 7.25, comparing apples to apples, is paying 1.2% in credit. So that program covers the entire down payment, gives your client 1.25 roughly toward closing costs. On a silent second, there's no payment, no interest rate, no accruing interest, but they're stuck at that 7.25 rate for 5 years. Now, another alternative, and what I would really love to put every one of these customers on, is our Elevate 3.5% grant. Comparing apples to apples, the repayable was paying 3.7, the forgivable is paying 1.2, the grant program is paying 3 basis points. It's a $100 credit. So they give up a lot of the help that they would get for closing costs, but that money is forgiven at the close. This is the only DPA product available in the marketplace where there is no recorded lien, and they could literally streamline that product after they make 6 payments. So again, the beauty of this is you're going to get them in, we get escrow closed, either the borrower's got to have some money or we get a bigger seller credit, but this is the product that has the quickest exit strategy. You're going to get this buyer out of this loan after they've made 6 payments. And what's nice about it is we try to give you the path to get into the product, but we also give you the path to get out. After they've made their 6th payment, they're eligible for a streamline. You bring this loan back to us. Number one, we waive your underwriting fee. So we're going to save your client $599 right off the bat for partnering with you and you partnering with us and bringing the loan back. Number two, we service this loan. So when it comes time to do a streamline, we're going to have all of the money that's currently sitting in their impound account. We will net that impound account, which means we subtract the money in the title and or in the insurance and tax impound account, and we will then reduce the payoff amount. That is actually a dollar for dollar savings on the cash to close for your borrower. So we lead you down the path, we get your client into the home, then we give you the best possible exit strategy to get them out of that higher interest rate loan and into the best available market rate.
That's it. Very good.
Yes, sir. So that's our spiel on down payment assistance. Any questions on that at all?
Nico had a scenario. I've priced it out for him. So Todd, I'm going to take over real quick to get that pricing up on the grant for us. Can everyone see my screen?
Yes.
Perfect. So Nico had a scenario for a 580 purchase price, first-time home buyer, wants to go conventional. I priced this as an income meets for the AMI at a 740 FICO with a 43% DTI. And this is what we're getting for that 3% grant so that we can have that 100% CLTV. Jason, if you want to jump in, you can. I know that you are the expert on this, or I can keep going.
No, go ahead and keep going.
So on this scenario, right, we're going to be getting, I mean, at the nearest par is 7 1/8 is going to be giving back a small credit, but we can move up that to up to 1.2 points back roughly to the borrower at close, which will make it a little bit easier since we will be on that conventional stuck at only 3% in seller concessions we can ask for to start minimizing some of those closing costs. But in this in this scenario, now we have that full 3% down payment covered. And a lot more leeway on where we can choose to go on that interest rate. And same thing applies with this as it was for the FHA grant, is that this is money forgiven at the close of escrow, that after 6 months, it's available for them to use as equity in a refi.
Excellent. Nico, any questions that we can answer for you specific to your scenario?
No, this is perfect. That's just what I wanted to know. On the thing, what the pricing range was to them, to so I can kind of have an idea, use worst case scenario, and make sure my DPI is in line and what the payment would be for them. Obviously, they could always be they're going to refi in the future if they want to, but we'll be able to have that. I'll be able to kind of have a better idea now. So thank you.
You're welcome. Thank you for joining the call and for bringing that scenario to the table. It's that's what we're here for, and that's what we want to use to benefit everybody else that's on the call. All right, guys. Any other questions? Any other subjects anybody wants to touch on? Raj, looks like you got yourself unmuted. I don't know if you're back and we can hear you.
I don't think it's.
Yeah, we can't hear you.
I think you just need to get a microphone.
Shoot me a text if you have a question, and I'll answer your question. And that's I just checked to see if Raj was going to text me, and Andrew, who's another guy I've worked with for a very long time, who's an exceptional duck hunter also, sent me a text that his mic's not working. So, hey, if you have any questions, Andrew, just send me a text and we'll be happy to address those for you. But I think I'll just share some industry insight. And I don't want to say interest rates don't matter, because they do. So, Raj, my camera sits right on top of my chat. So let me.
Raj was asking about doctor loans.
Raj, were you here when we talked about the doctor loan previously? Okay, No, okay. We actually touched on one that we literally have a doctor loan that is rolling out in the next couple of weeks. So just to kind of reiterate that, we've seen a draft of the guides, we've gotten a glimpse of it. We don't have really tangible information, but what I can share with you is that we are rolling out a physician loan. And what we're going to see with that is up to 100% financing with no mortgage insurance. Loan amounts up to $2 million, credit scores down to 680. And some of the unique attributes to benefit physicians is we will waive student loan payments. So we omit student loan payments entirely. We will use projected income. So if you've got a doctor that's completing their residency and they've signed a contract that's going to take effect in a month or two, we will use that future income to qualify. So it is exciting. We're excited. And there is no doctor loan in the marketplace right now. And another nice attribute to this loan is being provided by one of our jumbo investors that is our best priced, most aggressive jumbo investor. So while we have not rolled it out yet, we're hoping by the end of the month. The feedback we've gotten is that this pricing is exceptional. And this is going to be a viable product. You know, sometimes you get those programs that roll out that on paper look pretty good, but the practical application is not there and you don't do a lot of business on it. Our expectation that this physician loan is going to be exceptional and it's going to be a product that we can do a lot of business on.
Jason, I'm going to take over again. Linda had a question for pricing out a 600 FICO DPA. She was looking for a forgivable, but I think repayable is going to have to be the route we take. Pulling up that pricing for her right now.
Absolutely. And just Linda, so you know, unfortunately, I mean, we can show you the pricing on a forgivable DPA, but as you get into that 600 credit scored sector, obviously the pricing is going to be impacted, and the forgivable is generally not very favorable.
Everyone can see my screen?
Yes.
Perfect. Well, on this one, I mean, this is going to be our Aurora program. 640 is where we get to that grant and able to use Boost, which has a lot more lender credit. But once we get under 640, Aurora is the only route we can go. And we're going to see that considerable difference in pricing. A lot of times we see if we can try and get a rapid rescore, something to get that FICO score up. But I mean, at 600 might be a bit of a stretch. But for this, right, borrower paid, the par rate is 7 1/8. I mean, looking to get the most lender credit we can will be up at 8 1/4, and that might be harder to sell, but that is on a repayable product. I mean, we're going to really want to be looking for things like seller credit to minimize those costs to close in order to make it work. But I mean, as an apples to apples comparison, 8 1/4 for the repayable, right, giving back 80 basis points. But if we try and jump to that forgivable, and this is where we say it really doesn't make sense once we get to those lower FICOs, that forgivable is coming at a cost of 1.5 points just to get to 8 1/4, and that's going to be the most amount of the least cost.
Dylan, can you open it up to show all rates on the forgivable product?
And everything's just a cost.
Yeah. So yes, this is why you start to really negate any benefit of the down payment assistance program. For example, 7 1/4 is at a 2.2% cost, and we're giving you a 3.5% forgivable lien. Really, net benefit to the customer is about 1 1/4. So we would rather partner with you on a repayable, find a way to get some seller credit into the transaction, and come up with a really good exit strategy to improve their credit score over the next 12 months and get them out of this higher interest rate loan. Yeah, and Nico, the doctor loan will be huge for us. I agree. I think it's going to be an absolute, I don't think you're going to go do $10 million a month in doctor loans, but I think number one, it gives you a very unique approach to take with your realtor partners and something to market, that there is a new product that's going to get your phone to ring. And it does sound like there is a very good practical application for that loan where it's going to work and we're going to be able to close transactions. We're going to close business on it. Looks like Raj is typing something. I can see that intent look in his eyes.
No, you're absolutely right, Jason. I think that there is It's a good opportunity there, but especially here in Northern California with a lot of different hospitals and new doctors moving in or still getting finishing their residency now, wanting to buy a house, because they don't want to pay rent, but again, they don't have the big down payment. Some of them have the benefit of like a Kaiser where they can get a loan for the down payment through Kaiser, but a lot of them don't want to do that. So this, I think, will be awesome. Thank you.
Yeah, no, hey, we're excited by it. We really are. There's a lot of optimism. We've had some programs they rolled out. It's like, hey, we're going to roll out the 5 to 8 unit DSCR. And a year later, as a company, we closed one loan and it was painful. This is one of those products where there's a huge appetite nationwide for this. So Raj, jumbo loan programs, loan amount 970. So that's probably San Bernardino, Riverside County. We absolutely do. We have 5 to 6 different jumbo products. Our pricing is exceptional. We literally are generally top 1, 2, or 3 on Loan Sifter on jumbo. We do a huge volume of jumbo. And like I said, I've got multiple different options, everything from a really, really clean, W-2 pay stub, 2 years tax returns jumbo to AUS driven jumbo, where you're going to have reduced documentation from an AUS platform. You're going to have reduced assets from an AUS platform. So send us the scenario. We will price it out for you and we will help you lock that business in. All right, guys, what else do we have? Do we think here we got Andrew reaching out. Do we think the doctor program will work for veterinarians? That is kind of a funny question, but they are still doctors. I don't, Dylan,
I think I saw vets on the.
I do want, they listed, and I thought DVM, which is a doctor of veterinary medicine, was one of the doctors that was acceptable. So Andrew, we will get back to you on that, but I do think, in fact, you guys talk. I have the first marketing piece that is drafted. I don't think anyone else in the company got it. I've seen it and it lists everyone who's eligible. Hold on, hold tight. Okay, we have what is a VMD? That is one of them that's listed. I don't know if that's a veterinary doctor, but VMD is listed. Doctors, dentists, pharmacists, VMD, DPM, CRNA. I'm gonna have to look up. I'm gonna have to spend some time coming up with what these acronyms are representing.
DVM says it's a vet.
Doctor
DVM, but this is a VMD. And I don't know if VMD is the same as a DVM, then Andrew,
it's a
veterinarians will qualify for this.
On the preliminary guidelines, yes.
Based on what we're seeing so far, yes, that is pretty exciting. Okay, guys, what else do we have? VMD, veterinary medical doctor. Thank you very much, Linda. Andrew, we have the answer based on our preliminary guidelines and marketing material. Veterinarians will qualify for this program. So now, Elizabeth, you talked about how to go find business. You can now take this flyer and go see every veterinarian in your city.
Which is good because I have to go to the vet today. So there you go.
And I saw Raj's cat walk across his screen. So Raj, go take your cat in and tell your vet you can do a loan for him. Okay. What about firefighters, police? So, I mean, we have a DPA program. We don't really have any other special, unique first responder type of products. I do have a DPA program that has some unique benefits for first responders, teachers, educators, military, former veterans. But it's very, very specific on DPA for non-first time home buyers who have very high incomes and exceed income limits, where they get some exemptions and some enhanced pricing. But outside of that, we don't really have anything. I mean, we just give them the normal, exceptional level of service, Raj, that we give everyone else. Okay, guys, we're coming up on 1 hour. We value and respect your time. Do we have any other questions that we could help anybody with?
Not from me, but this was really awesome. So thanks for getting us all together and just talking some things out. Hopefully some
You're welcome.
nuggets came out.
You're welcome. Hopefully, I mean, it's, you always try to build a better mousetrap, so to speak. And we are sampling this meet and greet to just see, is there value in it? Number one, do people show up? We did one. When was it, guys? Like like December 20th.
Yeah.
And we knew that it was really a potentially difficult time of year. And we had no one show up. It was the three of us, me, Todd, and Dylan, sitting here staring at each other for about 5 minutes. And then we said, okay, no one's coming. So we're going to end the call. But if there is value in it, we will continue to do it. If people show up, we will continue to do it. We have another training that is scheduled for the 28th of this month. Marketing blasts will start going out today. And that is going to be on all of our non-QM, so our jumbo and non-QM and DSCR programs. So some of the non-agency business. And we would be happy to get everybody on there and do a follow-up training on that. But if you have any questions in the meantime, reach out to myself, to Todd, to Dylan. We are all here to help. We value and appreciate the partnership that we have with each and every one of you guys. For those of you that are newer to us, that would be, we appreciate you jumping on. Do we have any loan programs for undocumented? Yes, DSCR. Kind of. They have to be somewhat documented, but let us know. And like I said, we'll probably put another one of these on the calendar in February. We invite you to come back if you found value in it. And if there's anything we can help you with in the meantime, feel free to reach out to us. But I'll let anybody else jump in and put their closing thoughts in, both Todd and Dylan. But again, from me, thank you very much for joining us. And for those of you that went on camera, it's always great to see you, Raj. Great seeing you. If anybody needs any other help, just reach out. But Todd, let you wrap it up.
Yeah, I'm glad to see everybody here. We just want to be here to help, and I'm definitely looking for your participation and letting us know exactly what that is. So whatever it is we can do, don't hesitate to reach out and speak directly. Thanks.
Thank you, guys. This is very valuable. Seriously, it was. So please keep doing it, and we'll have definitely more questions. Be better prepared on the next one. Appreciate it.
Okay, awesome. Thank you for joining us, Nico. Okay, guys, have a fantastic day, and thank you for being a part of it.
Thank you, everyone.
Thank you.